Welcome back to XRP Signal Hub. This is where we cut through the noise and focus on what institutions are actually building before the headlines catch up. If you're here for real signals, not recycled narratives, you're in the right place. Now let's talk about what most people think happened this week. Another DTCC update, another round of tokenization headlines, another massive number thrown around to grab attention, and most people stopped right there, but that's not the story. Because while everyone was fixated on eye-catching figures, something far more important has been unfolding quietly in the background, a shift in how settlement itself is being rebuilt. This isn't about tokenizing assets for marketing purposes. It's about redesigning the plumbing of global finance. And the XRP Ledger isn't just part of that transition, it's being positioned as a functional layer institutions can actually operate on. Now I know what you're thinking. You've heard the tokenization pitch before: BlackRock, JP Morgan, pilot programs everywhere, lots of announcements, very little follow-through. Here's the reality most people miss. Tokenization without settlement infrastructure is just expensive window dressing. The real power isn't in who issues the token first, it's in who controls the rails the value moves on. And that's where Ripple's quieter moves, especially the ones that barely made headlines, start to matter a lot. Because behind the scenes, Ripple has been methodically embedding itself inside the institutional settlement stack. This isn't speculation, this is documented integration. I've been following DTCC filings, member updates, and infrastructure partnerships that aren't designed for retail visibility. At the same time, I've been tracking how Hidden Road, now operating as Ripple Prime, has positioned itself within core fixed income clearing systems. These are real relationships being built in real time. So here's what we're going to break down today. First, why the DTCC's tokenization timeline just shifted from someday to operational, and why that matters far more than hype. Second, how Ripple effectively gained exposure to the US Treasury settlement layer without most people noticing. Third, how the XRP Ledger is evolving beyond payments into native on-chain financial primitives institutions actually need. And finally, how all of this connects when institutional money starts moving on-chain at scale. Let's start with the DTCC. Most people talk about it like it's some abstract entity planning for a distant future. That's completely backwards. The DTCC is the central nervous system of US capital markets, equities, bonds, treasuries. Virtually everything settles through its infrastructure. We're talking over $11 trillion in transactions every single day. So when the head of DTCC's Digital Assets Division confirms regulatory clearance and a live tokenization rollout timeline, that's not PR. That's structural change. But here's the key detail almost everyone misses. The DTCC isn't rushing this. They're taking a phased approach, starting with limited asset classes and controlled environments. That's exactly what you'd expect from an institution that cannot afford failure. And the chains they work with during this early phase, those become the default standards institutions build around. This isn't about which blockchain is popular on social media. It's about compliance, settlement finality, integration with legacy systems, and existing regulatory relationships. Which brings us to the Hidden Road acquisition. When Ripple spent over $1 billion on a prime brokerage, a lot of people misunderstood it. Some thought it was overpriced, others assumed it was about expanding institutional payments. That's missing the point. Hidden Road wasn't just a broker, it became a direct participant in DTCC fixed income clearing, including government securities. That means Ripple Prime now sits inside the same settlement infrastructure used for US treasuries. Not adjacent, not partnered, integrated. Why does that matter? Because treasuries are the foundation of institutional collateral, margin, liquidity buffers, regulatory capital. Everything flows through that market. If blockchain-based settlement touches treasuries, it touches everything. Ripple didn't buy Hidden Road to compete in retail crypto. They bought a seat at the institutional settlement table. So when the DTCC begins tokenizing treasuries and fixed income products, Ripple Prime is already positioned where settlement happens. That's not disruption, that's insertion. Now layer this with what's happening on the XRP Ledger itself. Tokenized assets are meaningless if all the financial logic stays off-chain. True efficiency only comes when lending, collateralization, and yield management are native to the ledger. That's why the recent advancement around native lending functionality on XRPL matters far more than most people realize. For the first time, loans can be enforced directly at the protocol level, not through third-party DeFi apps, not through centralized platforms, but natively. From an institutional perspective, that's critical. Banks don't want dozens of bespoke DeFi protocols. They want standardized, audited, protocol-level primitives they can build on safely. This opens the door to structured products, collateralized lending, and treasury strategies that run entirely on-chain, with settlement, custody, and yield in one environment. And this isn't theoretical. We're already seeing real-world usage. Government-backed real estate tokenization running live, regulated bond issuance distributing XRP-based incentives, tokenized real-world assets on XRPL growing exponentially year over year. This isn't speculation, it's infrastructure being used. Now zoom out and connect the dots. DTCC tokenization, treasury settlement access, native on-chain financial primitives, regulatory clarity in key jurisdictions. These aren't isolated developments. They're components of a unified institutional framework being assembled in real time. While other players are building parallel systems, Ripple is integrating into existing financial infrastructure and upgrading it from the inside. That's a much easier sell to conservative institutions, and this is why price action lags infrastructure. Markets don't price in systems until volume flows through them. We're still early in deployment, not adoption. But when these rails go live at scale, even modest percentages of institutional settlement volume dwarf anything crypto has seen historically. That's the long-term signal, not hype, not timelines, not social media narratives. Infrastructure first, volume second, price last. So the takeaway is simple. Tokenization is real, and it's accelerating. Settlement infrastructure matters more than issuance, and the XRP Ledger is far more deeply embedded in institutional build-outs than most people understand. If you're watching daily candles, you'll miss it. If you're watching infrastructure, you won't. That's the signal. If this breakdown helped you see what's happening beyond the headlines, let me know what you want to dive into next. Settlement mechanics, regulatory shifts, or institutional competition across chains. Drop it in the comments, share this with someone who still thinks crypto is just speculation, and I'll see you in the next XRP Signal Hub update.